You work hard for your money, right? But did you know your money can work hard for you? That's what investing is all about, putting your money to work. Investing helps you grow your wealth over time, beating inflation and reaching your financial goals. Think about it. Leaving your money in a savings account is safe, but it won't grow much. Investing, however, offers the potential for much higher returns. Sure, there are risks, but with smart choices, you can make your money work harder than you ever could. Ready to watch your money grow? Let's dive into the basics of investing and explore some common investment options. Don't forget to subscribe, like, and comment. Remember, the best time to start investing was yesterday. The second best time is today. When you buy stock, you're buying a small piece of ownership in a company. It's like owning a tiny slice of your favorite pizza place or clothing store. Companies sell stock to raise money for things like expanding their business or developing new products. As a stockholder, you become a part owner, also known as a shareholder. If the company does well, its stock value goes up, and your investment grows. You might even receive dividends, payments made by the company to its shareholders. Of course, there's risk involved. If the company doesn't perform well, the stock value could go down. That's why it's crucial to research companies thoroughly before investing. Diversification, which we'll talk about later, is key to managing risk. Bonds are different from stocks. When you buy a bond, you're essentially lending money to a company or government. They promise to pay you back the original amount you loaned, plus interest, over a set period. Think of it like lending money to a friend to start a business. They promise to pay you back with interest. Bonds are generally considered less risky than stocks, but they also offer potentially lower returns. Bonds can be a good addition to a diversified portfolio, providing a stable income stream. They can help balance out the potential volatility of stocks. ETFs and mutual funds instant diversification. Don't want to put all your eggs in one basket? Enter ETFs, exchange-traded funds, and mutual funds. These investment vehicles allow you to invest in a basket of stocks, bonds, or other assets with a single purchase. Think of it like a variety pack of chips. You get to try different flavors without buying a whole bag of each. ETFs and mutual funds offer instant diversification, spreading your risk across multiple investments. They're a great option for beginners because they offer a simple and affordable way to diversify your portfolio. Instead of researching and buying individual stocks or bonds, you can invest in a pre-selected basket that aligns with your investment goals. Managing risk and protecting your investments. Investing always involves some level of risk, but don't let that scare you away. By understanding and managing risk, you can make smarter investment decisions and protect your hard-earned money. One of the best ways to manage risk is through diversification. Don't put all your money in one stock or bond. Spread it out across different asset classes, industries, and geographies. This way, if one investment performs poorly, others can help cushion the blow. Another essential aspect of risk management is understanding your time horizon. How long do you plan to invest your money? If you have a longer time horizon, you can afford to take on more risk. If you have a shorter time horizon, you may want to choose more conservative investments. Start small, dream big. Your investing journey begins. Congratulations! You've just taken the first step towards becoming a savvy investor. Remember, investing is a marathon, not a sprint. Start small, stay consistent, and don't be afraid to ask for help along the way. There are countless resources available to help you on your investing journey. From online articles and educational videos to financial advisors and investment clubs, you don't have to navigate the world of investing alone. The most important thing is to start. Even if you can only invest a small amount each month, it will add up over time. Remember the power of compound interest. Your earnings start earning earnings, creating a snowball effect. So, what are you waiting for? Start investing in your future today. If you enjoyed this video, please subscribe, like, and comment.